Hey there, pro traders, and welcome to the first market review, Forex market review for the month of February, being held by yours truly, Ian Giffen, here on behalf of the GoPro Trading Academy. As always, if you're enjoying our material, don't hesitate to hit that subscribe button for the channel. And as always, do hit that like button if you're getting value out of our stuff. All right, so last week ended up being a lot more interesting than expected. Normally, the focus is on non-farm payroll, with the markets really taking a little bit of a breather in anticipation of the employment numbers coming out of the US. But last week was very much an exception. The main theme really being the news coming out of the ECB that they intend tightening up their monetary policy after having had a very loose monetary policy for quite some time, certainly for the last few years with the pandemic. So that really caused a big turnaround in many of our euro-based instruments. And you can see here, starting as always with the euro-US dollar, that on the weekly time frame, we've got this very strong bullish impulse candle finishing pretty high up and back in the channel. So not much in the way of trading opportunities last week, but there were a few. And had you taken them, then certainly last week should have been a profitable week for you. Just looking at that on the daily time frame, you'll see how we've had two impulse waves, one after the other. First with this false bearish breakout, and now on the daily time frame, we're seeing a potential bullish breakout taking place. So that false breakout, obviously, and the previous false breakout as well, if you're using the LPO channels, means that we do have a wider LPO channel. And of course, if you're an HTC trader, you will notice that on Friday, it came smack bang up to our previous resistance level, and it's currently holding there. So we really need to just wait and see what happens here. But there is the potential, obviously, now for a bullish breakout. But as we don't second guess the market, we wait for the market to prove itself. Right, so moving on to the cable here on weekly again. Not nearly as interesting a week as you can see on the weekly time frame. Also a bullish weekly candle, but not even an impulse candle. Market fizzling out late in the week. And of course, on the daily time frame, we are very much inside of the channel. But we did get a impulse wave following the previous impulse wave. So if you were previously trading the class 1 WM patterns, then of course that has come to a very abrupt halt. And again, this is now a time to wait and see. Here on dollar yen, very little happening. The weekly candle you can see just being a low test or hammer. Testing again the resistance level, but certainly not breaking through that on this time frame. And here on the daily, you can see as well, we don't have anything really interesting to look at all. No impulse waves and deep inside of the channel. Dollar Swiss weekly. Interestingly, very different picture compared to Euro USD, but that is really because the news on the Euro doesn't directly affect the Swiss franc. And you'll see on the Euro Swiss franc as well, there was a significant bullish breakout move when we get there. But again, yeah, weekly time frame, there's nothing for us to look at or be interested in at all deep inside of the channel. And likewise here on the daily time frame, we did discuss last week the potential for a bullish resumption after we'd seen the breakout of our channels here. But during the course of last week, of course, it fell straight back inside of the channel. Now, remember, if you're a class 1 trader, then you would have been looking out for the end of this bearish retracement wave because this still does qualify as a class 1 W pattern. All right, so if that's the case, then certainly if you're trading hybrid, you may well be in a trade already and had a winner on that. If you're trading the HTC or the H4 Impulse, you'd be looking for a setup on that, in fact, today. Very aggressive approach again if you're not looking at channel breakouts at all. Right, on the Loonie, as it's called, US dollar CAD, here on weekly again, you can see very little last week with that that hammer. So deep inside of the channel, nothing of any interest to us there at all. But certainly, and the same applies on the daily time frame, deep inside of the channel, no valid patterns, we move on. Aussie, well, we spoke previously about a potential bearish breakout, and of course that didn't transpire last week, and that weekly candle not looking like anything. And here on the daily, we could see we did have that breakout that we did discuss last week. We did get the pullback all the way back into the channel, showing a level of weakness that's not great. But Friday did close outside of our HTC channel. So unless you're specifically looking for a class 1 M pattern over here, then you should well be looking for a bearish entry on the H4 time frame to short this market. Now, remember, we do require the entry to be outside of the HTC channel, even on that more aggressive approach. On the Kiwi, this obviously, as you guys will be aware, let's just have a quick look at the weekly first. We'll come back to that. Overall is much more bearish than the Aussie. And we discussed a week ago the fact that we are well outside the HTC channel here. And the fact of the matter was we were in a bearish impulse wave. Now, if you're trading the continuation strategies, you'll treat this inside candle as a retracement. But if you are trading an impulse type strategy, you'd be looking to treat that as an impulse wave. Now, what we had on Friday, obviously, was that bearish candle not quite giving us the impulse candle. Would have been great as a bearish impulse engulfing candle. It didn't work out that way. So there was actually no setup this morning for this, but it was very close to being a daily impulse setup. Keep your eye open on that one. We could well end up with great setups going forward. And of course, if you're trading the lower time frames, then likewise, we have reason to believe we are back into the bearish phase 1 or impulse wave, and you'd be looking for a setup already from today. So definitely potential for us to short this market during the week ahead. Euro Yen, moving to our Yen crosses, and here's another example of the Euro taking off like a rocket last week. Nothing for us to look at here on the weekly time frame, but on the daily, Friday did give us a bullish breakout. So breakout of our HTC channel. Now, it's not a valid class 1 pattern at all. We may well end up with one through the course of this week. So if that's one of your requirements, then you'll still be sitting on your hands. But if you're purely a channel trader, then you're outside the channel and you're going to be looking for a setup through the course of today. Nothing as yet, as you can see here on the 4-hour time frame, but keep an eye on it. We obviously don't second guess the market. We're looking for high probability setups, and this is looking like there's a lot of potential for one of those through the course of today or even tomorrow. Right, on the GBP Yen, not that much happening either on weekly time frame. We did get a bullish impulse candle last week, which really is represented on the daily time frame by this extended bullish wave. One bullish candle after the other now, basically for pretty much 2 weeks until we got to Friday. So there's nothing really for us to trade here. What we were looking for before, as you'll remember last week, is a class 1 M pattern here. Didn't happen. Still waiting to see what happens here. But of course, this can't be a class 1 pattern now. At best, it'll be class 2. So really, that's fallen off the radar for us altogether. Much better pairs to look at. Swiss Yen on weekly, again, inside of the channel. Technically, this is still a trend. Remember that. But with this bearish retracement wave showing weakness, it's not something that we'd potentially be looking at. Now, bearing in mind, however, with this bullish engulfing candle, if you're a bit more aggressive like I am, you can, in fact, advance your analysis for now. Now, that may well not end up being the case. This could end up being a non-relevant isolated high. But if you're trading impulse type strategies, then we're looking for a continuation of this trend. That being said, it's all still pretty weak. I don't like the fact that it didn't respect this level of support, but that's just the way it goes. Looking at the daily time frame, you can see that we had this very feeble attempt at a bearish breakout, but it's pulled straight back inside of the channel. So again, in this case, in a bearish direction, technically we're still in a trend here, but it's very weak. And as long as we are inside of that channel, we're not really looking to do anything at all. So another one to skip for the meantime. The Cad Yen, last week's weekly candle, you can see is really a nothing burger altogether. And here on the daily time frame, stuck inside of that channel, we're just chopping sideways. So that's one of the weakest pairs. Not interested at all. Aussie Yen on weekly, again, nothing interesting really to speak of, certainly not on this time frame. And even on the daily time frame, we did have that attempted bearish breakout, as we discussed a week ago, but it pulled straight back inside of the channel, tested that previous resistance level. So huge amount of weakness, not interested in that at all. Last of our yen crosses, New Zealand dollar yen, obviously the Kiwi being weaker than the Aussie overall. You can see here on the weekly time frame, that we are nearer the bottom of the channel, but nevertheless, nothing of interest on this time frame. And even here on the daily, where we did have this bearish continuation previously, last week really saw that fizzle out pretty much completely. And although technically we haven't seen the end of this bearish cyclicity, it's incredibly weak. So another one to leave alone. Right, so moving on to our euro crosses, here's another example of the euro strength last week with this bullish impulse engulfing candle. We're technically still in a bearish trend on this time frame over here, but with this candle coming back inside of the channel and not respecting that resistance level at all, of course, that shows significant bearish weakness and obviously the potential as well for the end of that bearish cyclicity altogether. And that's represented on the daily time frame really by the support level holding absolutely. And even when it tested it last week, Thursday, as the market took off, it went straight through this resistance level. So from an HTC point of view, we've got a bullish breakout. We don't have a valid W pattern, but that may well come about through the course of this week. We are outside of the channel, so do keep an eye on for those of you who are pure channel traders. You can see we've got a nice bearish retracement happening at the moment. Should we get a bullish impulse candle, it's certainly a setup for us to go long on this pair, on the lower time frame, obviously. Euro Swiss, there's another example. As I mentioned before, you can see the strength of the euro against the Swiss franc, bringing to a very distinct end the relative weakness of the euro over multiple months since certainly the last, well, since pretty much the middle of last year, and from the second quarter onwards. So we have seen an absolute end to this bearish cyclicity. We did see it before, and we've commented on that with a breakdown in bearish cyclicity. But certainly now with this this bullish move last week, where it's broken through these interim levels of resistance within the channel, that obviously has signaled an absolute end to that bearish move. So looking at that on the daily time frame, where we've now got, in fact, a breakout. That breakout, in fact, took place at the end of Thursday, close of play on Thursday. So for those of you who are trading this on Friday, would have been looking for a setup on Friday. Now, of course, that's depending on the how you use your point system here. So for many folks who may not have actually gotten to a trade, I do know one or two people who did take a trade in this area on Friday, early on Friday. And you either had to take profit on that, or else you are at break even, I would imagine. So that's not a bad one at all. For those of you who didn't get in it, we have seen a bit of a pullback through the course of Monday morning. Looks like that may well be coming to an end. So if we see a resumption, you're going to be seeing a bullish impulse candle on this time frame. That would be obviously the final signal to enter to go long. So just running quickly through our euro crosses here weekly, there's just a common theme of these bullish impulse candles. Another breakout, not quite as good looking as some of the others that we've seen. So remember, you don't want to overexpose yourself to the euro. But a similar picture here on Euro Cad, where we've seen that retracement, where it may well be getting a setup to go long on this one shortly. Now remember, for those of you who require that class 1 pattern, you still need to sit on your hands and wait for that. Euro Aussie, impulse candle on weekly, all inside of their channels, but a distinct breakout on Thursday, close of play already. Another opportunity for folks to potentially have gotten long on this. Very little of a opportunity on the execution time frame, unfortunately. So depending on how you look at that, you may or may not have gotten to a trade over here, but certainly we're looking at a potential setup through the course of today, possibly into tomorrow. But we're definitely keeping a beady eye on these euro crosses. The last being Euro NZD, of course. Here on weekly, we're seeing with that relative Kiwi weakness that we actually did get a breakout on the weekly time frame. So the first one, in fact, that we're looking at, where we're seeing a distinct breakout of the HTC channel and significant levels of resistance here on the weekly time frame. Just about everything else is still inside the weekly channel. So dropping down to the daily time frame, we'd obviously be looking again for that retracement and a setup to go long. Those folks who are more aggressive I know one or two people actually took a trade last week already. But technically speaking, we're looking for that pullback now through the course of this next week, and looking to go long again on that. So just keep an eye out for that, and that's obviously for the daily impulse. But that doesn't preclude you from trading H4 impulse. Now, again, typical Monday activity with this bearish move through the course of this morning. So dropping down to the H4 time frame. Well, let's stay on that chart. You'll notice a similar picture here with the market taking a bit of a breather during the early hours of this Monday. So keep an eye on that. We could easily be getting set up there as well. And again, just a warning that you don't overexpose yourself to any one instrument, or certainly one currency. Right, the GBP cross is not nearly as exciting. So Gbp Swiss, we did have an impulse candle in the weekly time frame, although it's deep inside of the channel here on weekly, but really nothing doing for us at all. And this is typical of the pound, where we've seen a bit of a protracted and messy, in fact, bullish move over the last couple of weeks. So really nothing for us to trade here at all. We've just been leaving these pairs alone. Dbp Cad, similar kind of picture, slightly stronger bullish candle there, but again, a protracted bullish move here deep inside of the channel. No valid patterns, just moving through these quickly. This is the weekly time frame on Gbp Aussie, and we had this test of the resistance level 2 weeks ago. In fact, last week just giving us this hammer, so not really showing any sustained power there, and in fact represented by the breakout that we discussed a week ago. But last week we did see that come back and encroach back inside of that HTC channel. Bit of a pity, really. But those of you who are not requiring, well, in fact, this did result in a class 1 pattern because it didn't encroach on the previous phase 2's price territory. But we didn't actually get an impulse candle at the end of this bearish phase 2. For those of you who are trading continuation strategies, such as a kickstart, you would have had an entry on that, and you would have reduced your risk on this by more than 50% already. So you'll be long on that already. Let's see what happens in that market. But of course, a much more interesting pair is anything to do with the New Zealand dollar. Here on weekly as well, you can see GBP NZD, where we have been outside of the channel on weekly for several weeks. We've discussed this before. Now, last week's weekly candle, however, not giving us much joy at all, really just sort of a spinning top. And on the daily time frame, you can see those 5 daily candles through the course of last week not giving us anything to work with at all. So technically the retracement wave is over when that low was ringed, but we've just got an inside bar here on Friday, nothing for us to look at there at all, which is a bit of a pity. Right, so let's move on to our other crosses. The first of which being the Cad Swiss here on the weekly time frame. I'm just going to go through these quite quickly because not much doing here at all, obviously, as you can see. Looks like we may well have that low ring today with the resumption of a bit of a bullish movement here, but it really is just going sideways deep inside of the channel. Aussie Swiss, likewise, weekly candle, not of any interest whatsoever. Going really much, just going sideways here on daily time frame, nothing for us to do. Aussie Cad, weekly time frame, as we discussed last week, we had this bearish breakout, and that was a week ago, but during the course of the last 5 days, you'll see that the market has pulled back inside of our weekly channel. So technically bearish cyclicity still intact, yes, but showing significant weakness. So not really interested with that at all. And you can see here on the daily time frame that last week again also pulling straight back inside of the channel, not respecting what was a support now and then became resistance at all. So not respecting that as resistance. So it even came up in this test of the preceding resistance levels over here. Now, technically, the bearish cyclicity is still intact because we haven't got a higher close during the course of this wave, but it really is extremely marginal, showing huge weakness. So we wouldn't be interested in that at all. Aussie Kiwi outside of the channel here on the weekly time frame. So looking at last week's candle, you can see we for the last 2 weeks in a row we've failed to get a bullish impulse candle. So during the course of this impulse wave, we've literally only had one impulse candle. which really is a sign of weakness if you're just using even single time frame analysis. But dropping down to the daily time frame, you'll see that that's represented by, yes, intact bullish cyclicity, but really, really weak. So these retracement waves or phase 2 waves encroaching upon the preceding phase 2 retracement waves, not really respecting that first level of support at all. And it's done that on multiple occasions. So I think we did have a setup to go long on this during the course of last week, but that fizzled out it was a very small loss. I think we almost got to break even on that trade. And that was on an H4 impulse before it rolled over and came back inside of the channel. So for those of you who are requiring a class 1 pattern, we haven't had one of those for a while, certainly a couple of weeks. Right, moving on to our final 2 crosses here on the Kiwi. So Kiwi Swiss on the weekly time frame. As you know, we are outside of our HTC channel on this, but last week giving us a bullish candle. So yes, it did make a lower low through the course of last week, but it turned around. Let's go have a quick look at that on the daily time frame. So that bullish candle for last week really just being represented by these 5 candles here, really nothing going on at all. It's just going sideways. So even though our HTC channel is a bit wider, you can see it's respecting what was a support level here as resistance as well. So in a pretty tight channel, nothing of interest for us there at all at the moment. There's the potential, obviously, for a bearish continuation at some point. And the same kind of thing here on Kiwi Cad. Bullish candle last week. Yes, we are outside of the channel. Yes, there's the potential for a class 1M pattern. And we could, in fact, be looking for a daily hybrid on this as well. Given the fact that I think we can actually advance our analysis on this. Let's just do that quickly. So that was the lowest low. Well, maybe not. We don't yet have a higher high here, but should we get a higher high at any point over here, we're ringing that low. And I'd be certainly considering this as a retracement wave already. And if you drop down to the lower time frame, we wouldn't be surprised if we see some bullish cyclicity establishing itself here. That may not happen, of course. Let's wait for the market to prove itself. If this does roll over and come back outside of the channel here on the daily time frame, we do have the potential for some lower time frame bearish trades on this as well, certainly with the core strategies. All right, so those are the currency pairs. Having a quick look at some of the other instruments. Gold in particular, not much here on weekly, as you can see, just a bullish inside bar or candle. And over the last 5 days, that bearish move really just being followed by some weak bullish cyclicity here. So deep inside the channel, nothing for us to be concerned with at the moment. Looking at the stock market, obviously this has been a topic of conversation for several weeks and maybe even months, certainly since the end of last year. And last week, just a continuation of this bullish move that was presaged in a way by the low test that we saw on the support level of our HTC channel here on the weekly time frame, and looking like this on daily. So through the course of last week, those 5 candles, we had that bullish continuation. Yes, there is a potential for a class 1 W pattern if you want to trade that here on the we're looking at that with daily as your selection time frame, but obviously your execution would need to drop down to the lower time frames for that. So there is potential for that, but I think there's also there's still a lot of this is still looking very bearish overall. Let's just say that from a technical analysis point of view on this time frame, and certainly those amongst you who are Ellioticians and enjoy Elliott wave theory, this is still looking pretty bearish. So that's not meant to be a predictive statement at all, but it is just a bit of a warning. Right, and similarly, you can see the correlation across the other US stock markets. So here on the S&P 500, looking very similar on the weekly time frame. Slightly more bearish, I guess, overall, but still a very similar picture with a potential for a class 1 W pattern. If you're a hybrid trader as well, you'd be keeping an eye on the H4 time frame here to look to see if we have a breakdown in this bearish cyclicity, which may actually be taking place as we speak. So do keep an eye on that. Similar as well on the Nasdaq is the Nasdaq always seems to go a little bit further than the others, being slightly more volatile overall. So here on the weekly time frame, Again, that support level having overall been respected on the weekly time frame. Let's look at it here on the daily, and a very similar picture again to what we've seen previously. So as I've mentioned before, if you're an Elliott wave trader, then you're probably looking for an end to this ABC pattern and the start of the next bearish impulse wave on this time frame. Right, so those are the stock markets that we look at. Here is oil. I'm sure everybody's aware of the fact that the oil price continues to go up. So here on the weekly time frame, very much outside of the channel, we've had multiple bullish impulse candles here on the weekly time frame. In fact, during the course of this bullish impulse wave, which has been going on for a couple of months now, we've had 1, 2, 3, 4, 5, 6, 7 impulse candles in a row, which is obviously quite a distinct sign of strength. Now, obviously, this isn't a class 1W pattern. It is only a class 2 pattern. But if you are looking at trading on the lower time frames, then certainly through the course of that impulse wave, you probably had some success. And if you were looking to trade this on the daily impulse, you would have actually entered the market at the close of play or the start of play, I should say, on Friday, and you'd be long on this already. So nice little setup for a daily impulse there. This was, in fact, a class 1 pattern as well. None of these closes, folks, in the phase 2 wave came back inside of the channel. That's an open, remember, so showing distinct strength here with this bullish trend on oil. So you should be taking advantage of that. I know several folks have done so. Right, so looking at some of the other instruments that are of interest to us. Here's Bitcoin. I know a lot of people have been trading this, and there's been plenty of money to be made in shorting the market over the last few months. But the last couple of weeks have put an end to that bearish run. It's still very much overall a bearish trend, bearish cyclicity very much still intact here. And in fact, if it does roll over soon, we're going to have a class 1M pattern. So there's still a lot of bearish possibility showing itself here on the weekly time frame. But we are in a phase 2 in that trend, and the cyclicity of that phase 2 is still very much intact here on the daily time frame. So deep inside the channel, no valid patterns here at all. So we're not interested in trading this time frame on Bitcoin at the moment. And that's it, folks. So not interested in looking at those. So if you've got any questions, remember, just pop it into the comments below this. I answer everyone personally. And if you are getting value out of our sessions, please don't forget to hit that subscribe button as well as the notifications bell so that you do get notified as soon as we bring out new material. All right, folks, so thanks for taking the time with me today. I hope you got value out of this, and I'll chat to you all later in the week. Bye for now.